Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing an important update about the economy and the investment market so you can see what we see in the global landscape. You know, a lot of the indicator numbers, generally speaking, around the world have been fairly positive. The last month or so, they've been just a tad bit weak. Not recessionary, so don't think that we're going down a lot in overall equity markets, in my opinion, but just a little bit of a slowdown. A lot of it contributed to the weather. If you're from the north or you're watching the news, you'll be glad you live in Florida, like myself. But at the end of the day, you know, you'll have slow times and fast times in the economy. Little bit of pullbacks in slow retail sales because of weather related. Nothing to worry about. Generally speaking, the U.S. economy is in a nice positive uptrend. I firmly believe we will see somewhere probably around 3% GDP growth for this year, 2014, which is a huge positive. Unemployment continues to come down. One of the things that I want to talk about is the last minutes that came out yesterday from the Fed last meeting with Ben Bernanke. Real interesting. Resney Wealth Management, myself, spot on what I was telling investors about interest rates and bonds. So if you didn't heed my warning, I'd suggest it's time to heed it now. Of course, if you're a client, don't worry about your bond positions because we're active. We've had you properly managed. If you're not a client, what Ben Bernanke and the Fed board basically stated, real simple. Things are going in the right path. They actually could anticipate raising rates, not just cutting back the QE or the quantitative easing, this bond buying purchases that they're doing by $10 billion a month, but actually sooner than later possibly raising rates if the economy keeps going in the right path, which currently is going up. So again, what does this mean to bond investors? Well, of course, we saw a sell-off of bonds as interest rates went up a little bit. I firmly believe we're going to see between 3 and 3.5% on the 10-year Treasury before year end. If that happens, bond investors who have 5, 10, 15-year maturity bond or bond mutual funds could easily see an 8 to 15% drop in the value of their intermediate and long-term bond or bond positions. So again, if you're chasing yield, if you own a lot of levered closed-end mutual funds, if you own a lot of long-dated or intermediate dated mutual funds or investments or bonds, your portfolio may be taken to the woodshed. I would suggest that you strongly look at each one of those bond positions because I firmly believe that as the economy gets better, you'll see rates go up as Ben Bernanke has stated and the Fed team of advisors. Ultimately, if the economy can improve, the Fed wants to take its foot off the gas pedal. This means that the economy is growing on its own, and this is a very, very good positive for investors who, again, are properly invested. On a relative strength basis, we continue to own positions mainly in the U.S. and primarily the small and mid-cap arena, simply because they've been relatively strong. Emerging markets appear to be getting weak again. And as most of our clients understand and our radio and TV listeners, we do not currently own positions in emerging markets because, again, they've been one of the weak houses and we did have a technical sell a number of weeks ago. Ultimately, relative strength trumps weakness. Remember, assets that are relatively strong in an uptrend historically outperform over various time frames, and assets that are relatively weak over various time frames underperform. What you want to do is own and gravitate towards relatively strong assets in an uptrend. As an investor, you do not want to just look at the stock market or bond market and not just the U.S., but around the world in all asset categories. That opportunity gives you a chance for real return and risk protection. On the risk side of Resney Wealth Management, we currently see no indicators out there that are turning negative in the next 3 to 9 months, meaning recessionary. We see very good positives, especially for the U.S. economy and a lot of the developing world. If you're a client of Resney Wealth Management and you have a question about your portfolio, please give us a call. If you're not a client, maybe it's time you call us for a consultation. If there is a difference, we invite you to experience it. Risk management is an important part of our strategy, and our clients appreciate that. Have yourself a safe and profitable day.